Welcome back to Bloomberg News. We just got some breaking figures on pending home sales, and we're going to try to digest the reaction to that and the latest manufacturing data we just seen. Mark Zandi, he's the chief economist at Moody's.economy.com. He joins us live from right outside Philadelphia in Westchester, Pennsylvania. Good morning to you, Mark. The market had been looking for ISM manufacturing to hit that 50 mark. It not only met, it beat, coming in at 52.9. How excited do we get about that growth in manufacturing, though?
Well, economists would get excited about that. I think that's the clearest sign yet that the recession, this great recession, is over. If manufacturing is expanding, and that's what this number suggests, then the entire economy is growing and the recession is over. So I think it's very good news.
Okay. Good news there. On the housing front, with the pending home sales figures that we did just get as well, do we call this a bounce back? Is the recession over?
Well, the housing market has also improved, much improved. Home sales have stabilized, have increased a bit. The pending home sales numbers suggest that they'll continue to rise into the fall. Construction, I think, is close to stabilizing. House prices, they have firmed this summer, but I expect we'll see some more price declines later this winter. Much of the improvement we're seeing right now in housing is related to, particularly with respect to home sales, is related to a housing tax credit that was part of the stimulus that expires on December 1. And so we will see some weakness in home sales later this winter and some further price declines. Adding
all this up, though, and taking into consideration the level of stimulus that we've seen, programs like Cash for Clunkers, other efforts to boost the economy, how real do we view these positive economic headlines?
They're real. I mean, I think the recession is over. We're now in a recovery. I think in the next few months, the data should look very good. The recovery should appear relatively strong because of all of the stimulus, the monetary stimulus, the fiscal stimulus, the housing tax credit I just mentioned, the Cash for Clunkers that you mentioned. I do think, though, the worry is for early next year when the benefit of the stimulus begins to fade. We still will have a soft job market. We still have problems in the housing market. We still have problems with commercial mortgage loans. I think the economy is going to be soft. That the recovery will be there, but it'll be a soft recovery.
It's a little early yet, I'll give you that. We're still in the midst of it. But this morning's Wall Street Journal had an editorial by Alan Meltzer, the very famous Fed historian. And he said, what happened to the Depression? That the media and that the politicians have overblown the depth of this economic crisis. Have we?
No. I mean, I think that's dead wrong. I mean, I think this was the most severe financial crisis, economic downturn since the Great Depression. And I do think it would have been a depression without the very unprecedented and aggressive actions by the Federal Reserve and by Congress and the administration with the fiscal stimulus. So, no, I don't agree with that. I think this was a very, very serious period of time for us.
And do you believe, then, that more stimulus is needed at this point, that we will see another government program to help us Band-Aid over the next issue we may be facing, as you suggest, potentially in commercial real estate or on another front?
You know, I think it's premature to know. We'll have to wait and see how the economy evolves over the next 3-6 months. But I think there is a reasonable probability, as I mentioned, that we get into early next year and the economy is still not fully engaging, that the recovery is not turning into a self-sustaining economic expansion, and it will need more help from policymakers. And there's some easy things they can do. More help for unemployed workers, more help for state governments who have very severe budget problems. We have to do something about those tax increases that are legislated for January 1st, 2011. So there needs to be some more policy, I think, efforts to make sure that this expansion really takes hold.
Quickly, Mark, I do want to get your reaction to the reports on Bloomberg that Paul Tudor Jones, the billionaire hedge fund manager, says Goldman Sachs was wrong in calling this an economic recovery. He's still worried about the future.
Well, I think it's reasonable to be worried, but I think he's wrong. I think that this recession is over in a very technical sense, that GDP, the value of the things that we produce, is now growing, and that means the recession is over.
All right. Mark Zandi, Moody's Economy.com. Thanks for your instant reaction to those headlines.